right to be at the given time. Okay, guys? So just remember those few terms, and remember most importantly the difference between buying and selling and what those terms actually mean. But I'll be focusing on that a bit more in lesson 2. Alright, now we're going to talk about what moves prices. Alright, somebody typed it in earlier. I'm sorry, I'm after forgetting your name already. But somebody typed in supply and demand when I said, what do you need to understand trading? Well, before we get too advanced like supply and demand, we needed some basic terms. But we do need to be aware that supply and demand is what moves prices. Now, where supply and demand meet at perfect timing, and in a perfect world, you would have price equilibrium. But that's not actually how the world really works, because there's too many contributing factors that affect prices. Scarcity, over demand, abundance, under demand. Supply and demand have an effect on prices. So it's something we need to be aware of, okay? Now, guys, the type of analysis we're going to be doing, and you've probably seen it in the names of some of the lessons, is technical analysis, okay? We're going to be technical analysts, okay? Now, we don't measure supply and demand past, present, or future because they're too difficult to measure accurately, and there's too many variables affecting both supply and demand. So, guys, if it's too difficult to measure accurately and there's too many variables affecting it, why don't we use it? Why don't we look into this type of analysis, which is called fundamental analysis, if it's, too difficult and too many variables? Okay. Well, it's risky, Matthew. Yeah, that's very true. Too much effort. Rohan, you have put it exactly correctly. Remember, guys, I told you I'm lazy. I'm going to work intelligently, not hard. And Rohan, it is far too much effort for the amount of payoff. All right, guys, fundamental analysts are the type of guys who will read the Financial Times in the morning, then look at the Bloomberg News. They'll make 7 or 8 days of full-time research looking into just one stock before they decide whether they're going to buy or not. Guys, does that sound like a lot of fun? Do you want to read about Yahoo's financial accounts over the last 15 months before you decide whether you're going to invest in them or not? Yeah, neither do I. I have absolutely no interest in that. So what we're going to be looking at is technical analysis, where we're measuring our trades from price action. It reflects supply and demand as seen through commitment of participants who are trading right now. So we're getting real-time information. We're looking at the charts. We're looking at the price going up right now. Now, guys, what do you think is better information to be working with? The charts showing the price moving up and down right now, or an article in the Financial Times that was written yesterday, was researched the day before, and has only gone to print since this morning and took a couple of hours to reach us? All right, exactly. Guys, that's why reading things like, websites, Financial Times, newspapers, it's all interesting and a bit of fun, but guys, it's not a good idea. You are the last person to receive that information. If you're reading it on a website or in a newspaper or online, you're already too late. You're getting the information too late because somebody had to take the time to type that up, and even that time is too late. So you're at the bottom of the food chain, and guys, that is not where we want to be. Right? Those are the guys who are losing money. Those are the guys falling in the 90-90-90 category. Also, a great thing about it is that it gets rid of subjective bias. It means you're not trading based off of your gut or your stomach or something like that. So we accept the price reflects supply and demand changes, and we apply these techniques based on price action. It allows us to reduce the randomness, measure our performance, and once we've actually started trading consistently, then we can actually look at our results and use them to measure whether we are generating profits and whether we will continue to do so if we stick to our current strategy. Okay, so now I looked at the different instrument types earlier, but what can we trade, guys? All right, I asked you this a while ago and some people typed in some good examples, but if we were to break them into categories, all right, Aziz, you've typed in oil. What category does oil fall into? Mr. Beant, foreign exchange is definitely one of them. That is very correct. The currencies are very important. All right, the most important obviously being euro, yen, and dollar, and British pound as well. And guys, the great things about the currencies is that they're very, very liquid. All right, You can see here there's great movement, there's constantly people in the market, they're open 24/7. And we can see here the euro US dollar, so it's how many dollars would you get for €1. These charts are quite easy to read, price goes up and down. And the reason we like currencies so much is that they're very liquid, they're mature and developed, okay? You can enter and exit rather easily because there's so many people trading them, all right? Information is readily available and widely produced. Guys, if I was to ask you right now, how much is the euro worth in US dollar? All right, I just showed you a chart there, but if I was to ask you right now, find out the dollar value of a euro, how long do you think it would take you to find that information? Okay, the fact that some people have already started typing in the answer means that it was actually faster to type the answer than it was for me to ask the question. So yeah, guys, that is how readily available foreign exchange rates